Welcome to Unfiltered Finance. I'm your host, Ron Geffner. By way of background, for those of you who don't know me, I started my career at the United States Securities and Exchange Commission, where I prosecuted money managers in New York City. Subsequent to my experience with the government, I went to PricewaterhouseCoopers, a large law firm, a small law firm, and then I co-founded Sadis & Goldberg with several other colleagues of mine. I've been doing this for over 30 years at Sadis. My focus primarily launching in private equity, venture capital, hedge, and real estate funds. At this time, we represent over 1,000 asset managers. They're located globally, both in the United States and abroad, agnostic to the investment strategy. I spent my entire adult career learning about how finance works, and I wanted to bring it to you. So to that extent, I want to welcome our guest, Chris McGuire. Chris is very well experienced in his field. He started his career at Goldman Sachs, Merrill Lynch, SBC Warburg Securities, Barclays, and other national and international investment firms before launching his own firm, Phalanx Capital Management, in 2004. Chris is well regarded and very knowledgeable about investments in Japan. So I'd like to welcome Chris to Unfiltered Finance. Welcome, Chris.
Thank you. Thank you, Ron. Thanks for having me.
Did I get it right?
You got it all right. First of all, day-to-day for me is a little bit different than many, given that I invest in Japan. So my day is actually at nighttime. So I'm working from Sunday night through Thursday night while Japan is open. So I start my week at 7 p.m. on Sunday night, which is 9 a.m. Monday morning in Japan. And I help manage clients' investments, investing in different types of equity and bond securities trading in Japan. And that's a market in which I was first introduced in early 94. And 32 years later, that's been my professional market.
So yesterday I had a conversation with a client of our firm that focuses on LATAM. And when he started, at that time when you started, was investing in Japan something that was really actively talked about, or was it something newer that was starting to emerge?
Back in the early 90s, in terms of global finance and capital markets and really the institutional markets, it was still the Wild West in many ways. In the mid-90s, looking at various businesses, buildings that the Japanese were buying, there was a huge economic bubble that occurred in Japan, which was one of the great bubbles of all time, where the equity market had soared to enormously high, very overvalued levels, peaking at about 39,000 in the Nikkei. That's the equivalent of our Dow Jones. And that peak was in December of 1989. And when I started working in Japan in 1994, that was 4 or 5 years after the bubble had burst. And the institutional markets were still very undeveloped. Hedge funds that may be household names today, firms such as Citadel or Millennium, which are enormous, tens of billions of dollars under management, were small emerging firms at that point. So a lot of the multi-billion dollar firms of today were running $50 or $100 million under management then, trying to take advantage of mispriced securities, nascent markets, and emerging markets. So when I was first exposed to Japan in early 94, I was a salesman, and there were a lot of stocks and bonds that were trading, and I was able to deal in very unsophisticated markets with unsophisticated investors, which allowed us a lot of great opportunity.
So the Japan market peaks in 1989. What were the causes, as best understood, to the bubble?
In simple terms, there was a huge asset bubble. And that one of the famous phrases that is commonly talked about, it relates to real estate. Japanese banks were lending, and I think for many of us in the Western world, we were looking at Japan as if the innovation of Japan, the hardworking business culture, which I respect a great deal, the integrity of how people work, was propelling Japanese innovation higher. And a lot of Japanese companies were having great growth. But with that, there was, I probably shouldn't use the word Ponzi scheme, but there was a lot of debt layered upon a lot of those assets to the point where Japanese real estate was skyrocketing. And banks were lending on that real estate, and it continued to propel itself higher. And the famous phrase that people still talk about today is that in the middle of Tokyo is where the emperor lives. And the emperor's palace is very close to the business district, so adjacent to Japan's Wall Street. And the palace has a 3-mile circumference around it. And the value of the Emperor's Palace at the real estate peak in 1989 was worth more than the entire state of California. As bizarre as that may seem, that just gives you a perspective of how expensive Japan was, how much money was flowing. Well, eventually reality struck and everything tumbled. And when bubbles burst, it's painful. When markets pull back fast, it's painful. And Japan, the Japanese economy, really took some major setbacks. Companies that had borrowed immensely to buy assets in Japan, as well as internationally. Here where I live in Chicago, I remember that the Japanese were talking about buying the Sears Tower, the prized asset of Chicago real estate, tallest building in the world at the time. But they also purchased, I believe, Rockefeller Center, film companies, and eventually they bought Pebble Beach at one point. They ended up selling those assets 5-10 years later for severe discounts, having a lot of losses. But the fallback was painful, and that really took about 10 to 15, if not 20 years for a lot of those losses to ultimately be digested.
One of the things that goes through my head, and obviously this is all age-based and life experience, I think back to 2008 in the United States, the financial crisis, and how Lehman and Bear each filed for bankruptcy on different Sundays. And I remember walking around a little bit in shock, trying to figure out if this was the beginning of the end, because what did I know? I really didn't have a full macro understanding of what was going on at the time. And then you mentioned Japan's bubble bursting in 1989. And I feel that what little knowledge I have on the Japanese market was it took Japan a long time to come out of it, right? It eclipsed, based on prior communication I've had with you, the market in Japan finally eclipsed the prior bubble in March of 2024. But before we get to that, the bubble implodes and Japan was in a really bad place from what I know for a really long time. Do you have any sense of what we did in the US differently post-financial crisis that Japan failed to do? If anything I'm saying is inaccurate, feel free to repaint the picture differently.
I think that initially, and I say this with great respect, there are a lot of cultural differences. I think in one area that I can sum it up, here in the US, we address the problems. And we normally have addressed our problems fairly quickly and fixed it, often with government help, possibly with help from the private sector. And when problems have come about, we address it and move on. Initially in the 90s, I think the Japanese had a much harder time dealing with these problems. Their banks that did all of this lending during the bubble years were left with a lot of bad loans. They were left with a lot of non-performing loans. They had what we refer to as zombie companies, companies that quite literally should have had the plug pulled and they should have gone bankrupt. But that's very, very difficult in Japanese culture. There's a sense of honor within Japan. Generationally, for centuries, there's that sense of honor. Think back to old Japanese history of honoring oneself and holding respect at a very high level. That finds its way into the corporate culture in Japan as well. In that when companies are doing business or taking a loan, there's a sense of honor to pay that back. And it's taken quite seriously. So what had happened through the 90s and even into the early 2000s is that it took a long time for Japan, the government and the financial system and the banking system, to really address these problems and to recognize that some of these companies weren't going to pay back the loans. So eventually, in the late 90s, the government started working with the banks to just write these loans off and move on and then start lending again. So they would lend and try to promote the growth that eventually did happen over the next 20, 25 years. So it was a slower process. And I think Japan has changed a lot. I lived in Japan. I lived in Japan in the 90s. I go to Japan regularly. It's what my business is. And I always found that Japan as a culture was kind of like the US 30 or 40 years earlier. So when I was living there in the 90s, I would walk from my apartment to the subway and I'd see men and women running sole proprietorships, running little businesses where they'd be out at 7 a.m. sweeping in front of their store. Now, as we move forward, I think the Japanese may be slow to adapt a lot of these more progressive business methods, but they are. And it's continuing to improve how business is done.
So when your investors, your clients are evaluating their portfolios, and obviously you say you've explained to them, to some of them at least, about the honor in the Japanese culture. What are there any other differentiating factors when looking at a company on an exchange here in the United States, an American company versus a Japanese company? What are the nuanced differences?
For me, a lot of what we trade, Ron, is Japanese debt. We trade a lot of corporate debt through a structure that's called a convertible bond, which is a bond that has some levels of equity participation in it. And so when I'm looking at Japanese debt, there's a tremendous creditworthiness in that debt. And I often tell our investors that Japan has the strongest, most creditworthy debt market in the world. And I reference the financial crisis in the fall of 2008 when the world was selling anything they could just to get cash. Stock markets were plummeting. Lehman Brothers went bankrupt. Debt levels were trading at very, very depressed levels. Japanese debt was the first market to actually have buyers. So whereas our debt markets were spiraling lower in October and November of 2008, Japanese domestics, domestic institutions, domestic banks, insurance companies, pension funds were buying Japanese debt. So the debt had more of a floor. And from there, I really always have recognized that there's a better ability to have comfort, that if I'm buying Japanese debt, it probably will not be falling the way we see here in the US. I know there's a lot of debt in my particular asset class that's issued by crypto companies or AI related companies or biotech that may work, but if their businesses don't improve, they may go out of business. Japan, there's very few bankruptcies. Companies are much more sound, and there's a better level of support. So that's one of the biggest features. And I think that goes back to the honor, in that companies have that sense of honor to borrow money and pay it back.
So walk us through the process of when you're evaluating the convertible debt that you're investing on behalf of your clients and yourself. What are the variables that you look at?
Maybe I'll mention a little about what a convertible bond is. So
Sure.
A convertible bond it's a hybrid instrument that is part fixed income and part equity option or a call option. So what a convertible bond gives an investor is a bond component, knowing that if it's issued at par, that at the end of the term, at maturity, the investors will be paid back par. Or if the equity rallies, they have an ability to convert that bond into shares. So if a stock price rallies substantially, they have the option to either receive par back or potentially convert that bond into shares. And what I've done for the last 32 years is specialize in convertible bonds and valuing those convertible bonds. And I have a lot of sophisticated models. And there's many other firms out there that have done this over the years. And that's where we specialize, is buying Japanese convertible bonds. And what happens with the convertible bonds is that in valuing them, I need to look at what makes up that value of that bond. So if a convertible bond is trading at a price of 105, for instance, part of that 105 comes from the fixed income value, which is the bond value, and part of it from the equity value.
I'm still not even sure who the audience is yet. It's still early days, but we can take a 2-second pause, and the amazing producers we have working behind the scenes can try and weave it in and make us look even more brilliant than you are.
All right. Okay. So what I'm trading in Japan primarily, Ron, are convertible bonds. And fundamentally, what a convertible bond is a hybrid instrument that is part fixed income and part equity option. And I started off my career as an options trader. And what we're doing as a firm at Eagles View is identifying what that option is worth. And we try to buy undervalued options. So when I look at convertible bonds, the first thing that I must do is value what is that fixed income piece? What is that bond component worth? So if a convertible bond is part fixed income, part equity option, the largest portion of the value comes from the bond or that asset price. So if a convertible bond is trading at a price of 105, for instance, if I were trading in the US, I would either look at comparable debt levels possibly credit default swap levels, or maybe we would do some rigorous analysis to look at the balance sheet to try to come up with our own valuation for what that bond is worth. The difference in Japan is that very often this may be the only debt that the company has. Many companies don't have debt, or they have very little debt. But what I can do is talk to a counterparty such as Goldman Sachs or Nomura Securities, which is the largest brokerage firm in Japan, and I can actually ask them where they will buy that fixed income component. They will give me a bid of, say, treasuries plus 100 basis points. So what they're doing there in the fixed income world is determining what is the yield worth. And I can actually calculate, using our models, calculate what that bond is worth. So again, if the convertible bond is trading at 105, and if they will pay me treasuries plus 100, that could be worth 90 points. So that means that the equity option, so the equity component, is worth 15 points. And what I will use is a Black-Scholes-like options formula, which is a standard method of valuing options. And if that looks to be very cheap implied volatility, we buy it. We look at how volatile a stock is, how volatile that stock moves. Is the stock moving 1% a day, 2% a day? And we calculate what the realized volatility has been. If I can buy the option at an implied volatility lower than the realized volatility, then we expect to make money because we're a hedge fund. We actually do hedge. We buy these convertible bonds and we offset that by shorting stock. So we establish market neutral positions. I'm not speculating on the market. I'm agnostic to whether markets go up or down. What I care about is movement. We care how fast the market goes up, how fast it falls. And we make money for our clients by rehedging our portfolio. It's our hedge. When markets fall, we have to buy shares purely to remain market neutral. And when markets rally, our portfolio gets longer. It sounds easy, buy low, sell high, but quite literally, that's what we do. We're always buying on dips and always selling on rallies. And the more a stock is moving, the more we get to trade, the more we get to realize profits and literally put nickels in the bank. So that's the general trading premise of what we do. And the creditworthiness of Japan allows us to hedge that bond component by selling it away at a very high level, a very, very tight spread, a tight credit spread, and eliminate that risk so that if there's an implosion, if there's a big credit event, such as the financial crisis, we will be somewhat impervious to that pain. We're not going to suffer the losses that many did. In fact, my portfolio that I was managing in 2008 was involved in these convertible securities, all in Japan. And whereas my counterparts trading in the US or global portfolios with Europe and Asia suffered dramatically. Convertible bond funds were losing 25 or 30% across the board and some much more. The portfolios I managed actually profited quite substantially. We generated a positive return north of 40% during 2008 because of the creditworthiness of Japan and the ability to eliminate that credit risk. So it's a true anomaly within the world.
So you talked about looking at risk and volatility in the market. What's the duration or set that you're looking for? Like how far back do you look? Is it 12 months, 24 months? Is it uniform or does it vary also?
When one is trading options, if somebody's trading a 3-month option, then it's very important to look at short-term volatility. How volatile is the stock over the short term? What we're trading, these convertible bonds generally have maturities or they have life, normally 5 to 7 years. So what I'm looking at, Ron, is primarily what has happened over the last 2 years or 3 years. I put a lot more weight on the long term, knowing that I'm not worried about what happens in the next 3 to 6 months. I certainly would like markets to be moving, yet I know that I have the benefit of time. We can be very patient, knowing that if nothing happens in the next 3 months, that's okay, because we still may have another 4 years to go. So I'm looking at primarily the last 2 or 3 years. It's also having a lot of familiarity with the stocks, given that I've been trading in Japan now for 32 years. A lot of the securities in which we're trading are stocks that I've traded quite a few times over the last 3 decades. So there's companies that have issued convertible bonds in the past that are issuing convertible bonds now. And so I've had a great familiarity with the companies, the fundamental understanding of those companies, how they move, what type of share price movement they have, which I believe helps give us a very good insight and understanding of how to construct the portfolio.
So for some of the younger viewers or less experienced viewers, given the duration of how long you've been exposed to the markets in Japan, what changes have really been the most visible changes for you?
The biggest changes that have occurred, many of which have occurred in the last few years, are how corporate Japan is changing and evolving. We started off our conversation talking about how Japan tried to pick itself up after the bubble burst in the late 80s. So most of my career, I never traded a bull market. The entire time that I was trading in Japan until recently, Japan traded like a bear market. It was almost like a cosine graph. It would trade to 22,000 and then trade down, and it would trade up and down sideways, literally for 30 years, until there were some changes that have finally taken hold. For the last 30 years, Japan was viewed as a value trap. A lot of cash-rich companies earning money, but never putting that money to work to improve growth, to innovate necessarily, to grow their companies relative to their global peers. But what happened a few years ago is that there was a Tokyo Stock Exchange-led mandate, as well as I like to call it, governmental push for companies to put that cash to work, to improve their corporate governance, to improve the way businesses were done, and simply, I say, more adapt a lot of Western or international business philosophies to do things better, so that they weren't just having stale, quiet, boring companies that were doing the same thing they always did while sitting on all this cash. So what's happened over the last 2 to 3 years is that due to those catalysts, as well as welcoming activists into the market, Japan is stimulating itself. People from around the world are buying into Japan. The equity market has gone to an all-time high. Currently, the Nikkei is trading near 55,000. It first went above its 1989 high in March of 2024. So it was just over 34 years that the market had never eclipsed its high. Now it's not only gone through the high, but it's gone through with a vengeance. There are a lot of very, very cheap companies from a fundamental basis, cash-rich companies, stocks trading at book values of 0.4, 0.5, with a motivation that they need to get their book value. They need to do things to improve shareholder value. And that's being done from increasing dividends, having share buybacks, taking that cash, and instead of sitting on it, they have to buy their shares back or invest it in some capacity to propel the shares higher and help the shareholders. That's something that was never done before. I go to Japan 4 or 5 times a year, and I meet with companies at conferences and individually, but companies are spending 30 to 40% of their profits are being spent in share buybacks and higher dividends. Japanese dividend yields are higher than the US, while interest rates are substantially lower. Japanese risk-free interest rates are 75 basis points, whereas here in the US, our 10-year bonds are yielding around 4%. Yet their dividend rates are substantially higher than what we have here. Japanese companies are giving that money back to shareholders. That's causing and has caused an enormous bull market. And I don't think it's done. I've never owned a Japanese stock in my life, Ron, but now I'm seeing true catalysts where there is a reason for Japanese stocks to rise, and they have. And I don't think we're done. I think this is a multi-year catch-up phase that Japan's catching up for over 30 years that were lost.
If you can, talk about inflation in Japan and its effect on what it is you do.
When I first was in Japan in June of 1994, I was a young guy. I was 25 years old, and it was enormously expensive. I know my boss said, don't take a taxi from the airport, because the airport taxi would have been about $300. It was a lot of money back in 1994 for a taxi ride. To go out and buy a bottle of beer, it was $8, whereas it may have been $1.50 or $2 in New York or Chicago. That just puts things in the relative comparison of how expensive Japan was. Japan has gone through deflation for most of the last 30 years. Again,
And that's why I asked, because that's what's going through my head as I kept hearing about deflation in Japan. So apologies to interrupt, but
no, not at all.
Yeah.
As we said very much through the financial crisis, inflation destroys money, deflation destroys credit. And a lot of the creditworthiness of Japan was declining. And as they had constant deflation over pretty much the last 30 years, they're finally experiencing inflation. The Bank of Japan has been trying to get the inflation rate up to 2% or higher really for the last almost 20 years. Economics came into the market in 2012, 2013, and Prime Minister Abe and his cabinet was meant to really, they looked as if they would be a group of politicians that were going to bring inflation back and get the economy growing. Now, there's real inflation going on in Japan. I regularly will go to stores. I look at how much goods cost. I go to some of the same restaurants to determine what is my bill looking like today versus a year ago versus 2 years ago. And it's real. And the Japanese are feeling it. They feel it with rice prices. Everybody in Japan eats a lot of rice. And that's been a big issue. The government is providing rice subsidies because a lot of Japanese nationals have had difficulty given the high inflation rate, given the weak yen. The yen is trading at almost 160 yen to the dollar, which is the weakest it's been since I've been in the markets. And that makes all imported goods, especially gasoline and oil, very expensive for the Japanese. So that's having its ripple effects throughout the economy. We're also seeing, though, the growth. Japanese exports are cheap. For you and I, Ron, here in America, anything coming from Japan is a lot cheaper than it once was because of this weak yen, and consuming those goods is helping the Japanese corporates, helping their economy. What I saw recently is that many companies are, on average, raising salaries at a higher rate than we've seen possibly almost ever. Certainly in my professional career, a lot of companies, kind of the average, are raising salaries by about 5%, whereas they normally may raise at 2 to 3%. That extra 2 or 3% of a salary rise is reflective of the inflation. So that's more and more money going into the economy that's going to be spent, and I believe truly will continue stimulating their economy. One other aspect about inflation, and this is key, it's very key for what we do, is interest rates. Japan is the only G7 country that's actually raising interest rates. The rest of us, and in our country, I know there have been some interest rate cuts, but Japan had been in zero interest rates for most of the last 20 years and then went negative for a long time. I think they went to negative rates in 2015 or 16, as I recall, and stayed in negative rates. So companies could borrow very inexpensively. Companies like Toyota or Sony could issue straight bonds with meager coupons of 40 or 50 basis point coupons. So quite literally, money was almost free. Japanese government rates were negative. They finally have gone positive, and over the last year and a half, the Bank of Japan has raised rates 3 times with 3 25 basis point hikes. So they've gone from effectively 0 to 75 basis points. Now, with this inflation that we're seeing, the general market consensus is that Japanese interest rates will probably go up another 4 quarter point hikes. So over the next 15 to 18 months, the market is expecting rates to move up to 1.75%, which is quite high. Currently, the risk-free interest rates in Japan are trading at the highest level since about 1997, which is a very, very long time. That's reflective of inflation. The inflation is real. Borrowing costs for companies have increased dramatically. And so they're no longer getting that free money. If a company were to issue a straight bond today, over 5 years, they could easily be paying 2 or 2.5% on a coupon, as opposed to a mere 40 or 50 basis points 10 years ago. As rates continue rising in Japan, it's highly likely that those coupon rates will go north of 3%. Now, in my small microcosm of a capital markets world, in Japanese convertible bonds, bonds are generally issued with 0 coupons because there's other enhancements. People buy convertible bonds not just for the yield, but they buy it very much for that equity participation. That was the equity component I spoke about before. So companies have been using convertible bonds as a means of borrowing for cheap, borrowing for zero, because all except one convertible bond in Japan has a zero coupon. And they're very attractive alternatives for the way companies will be able to borrow money. And for us as a specialist in Japanese convertible bonds, we have abilities to identify those that are inexpensive and hopefully worth buying and benefiting our investors. When a company issues a bond, it's a means of borrowing cash from investors. And normally, in order to borrow that money for an investor, we would expect to be paid for that. So we would expect to be paid some kind of a coupon, some kind of a yield. And straight bonds that are issued at a price of par will have a redemption date on maturity, where as a bond investor, one would get paid back par, let's say 5-year period that somebody would give a company money, they would be expected to be paid a coupon. So paid a coupon of maybe 1% or 2% or 3% or some amount of money to make it worthwhile to buy that bond and effectively lend the money to the company. Convertible bonds in Japan primarily have zero coupons. So there's no income. But the reason why we, as an investor in convertible bonds, would buy those bonds is because we feel that that equity option is priced inexpensively. Because of the ability for the shares to go up and the shares to move, we have models that specialize in identifying and pricing these convertible bonds and identifying which bonds are cheap, which bonds are inexpensive. And when we see that they're inexpensive, we buy them, feeling that ultimately they will trade up to their theoretical value. And that's how we profit. If bonds are trading at a high price, where we in our specialized field view them as expensive, then we will sell them to somebody else who may be paying what we consider to be too high or the wrong price.
So looking more on a macro level, has Japan been affected by, and if so, how, the application of tariffs around the world, or the wars that are going on between Russia and Ukraine, Israel, United States, and Gaza?
When the tariffs were announced last year in April of 2025, Japan, like most markets in the world, cratered. Japan fell over the course of 7 days. The Japanese Nikkei fell by about 17%. It was a very uncertain time. There was a lot of concern that, given Japan is one of the largest exporting nations in the world, exporting an enormous amount to the US, and the fear was that with the tariffs, and initially they were quite unknown on how painful they would be, but there was a fear that Japanese products would be more expensive, we would buy less, it would affect the profitability of Japanese companies immensely. So the stock market fell dramatically. It recovered. It took about a month or month and a half to recover and get back to the levels that it was trading at before the tariffs were announced, and then continued a soaring rally. I think over the last year, buying at the depths of the tariffs was a pretty smart trade. I'm not saying we did that. We're market neutral, but anyone that did performed very, very well. Now, I think they've come to, a lot of the companies have realized that they found ways to either tighten their belts or pass the tariffs on to their consumers, and it seems to have gone away. So it really doesn't seem to be affecting things as much in Japan. The market soared and is currently trading very close to its all-time high. The recent war in Iran, and the fear is all about oil in many ways. I mean, there's a geopolitical aspects, of course. War is never friendly, given the cost of energy in Japan has just soared as oil prices eclipsed, I think, $110 or $120 a barrel a week or two ago. That's a big fear on an economy where oil was already quite expensive. That can and may find its way into quite a bit of the Japanese economy. That's a fear right now, that if oil prices do go up to 120 or even 150, that could cripple things globally, and Japan would not be protected from that either.
Is there anything I might have missed in regard to anybody who's evaluating making an investment in Japan?
I think what I would suggest in looking at Japan, as I mentioned, I never owned a stock before because I never saw the catalyst. I never saw the catalyst for why stocks would go up. Yet now I've seen that catalyst. seeing how companies are returning their profits to their shareholders is impressive. Warren Buffett is buying Japanese stocks. He's been in the news a great deal as Berkshire Hathaway has been buying a variety of different companies in Japan. He's buying a lot of trading companies. He has 5 to 10% holdings in many Japanese trading companies that were trading at book values below 1 or around 1, which is very cheap.
Yep.
Many of these companies have dividends of 3, 4, sometimes 5%. That's enormously attractive. And we all know that when Warren Buffett buys something, he usually buys it forever. Well,
so if you could give the audience maybe, and this is out of left field, but a good out of left field, not a bad thing. What has Chris learned in the last 30, 40 years about investing in general that might be a unique takeaway that might benefit the audience? What have you learned either about yourself or about your investment thesis that people seem, when you communicate or share this tidbit, people seem really thankful for hearing it?
I think what's very important, I believe, is to look at Japan as Japan. There are global methods of valuing securities, valuing stocks, valuing bonds, options, convertible bonds, such as I do. But Japan is a bit different. The cultural aspects that are part of Japan, that are part of the Japanese DNA, find their way into the Japanese market. So there are unique nuances in Japan that cause the market to move in ways that would defy logic in other parts of the world. Sometimes we may wake up, I may look at the market one night and a stock that's done almost nothing for the past couple of quarters, couple of years, all of a sudden may have an enormous move over a short period of time because of some cultural elements that are pushing that stock and making it move. So I think that in investing, and for me, trading Japan, there's a lot of unique nuances that are not applicable in the US or Asia or Europe. But that's how Japan moves, how Japan works. And recognizing those cultural sensitivities can truly make a big difference in investing in Japan.
And the final question I'm going to ask you before we bring this to an end is, what keeps you up at night, or what is the biggest risk to the Japanese market that might be unique just to Japan, given how unique Japan is from what you're saying culturally?
A way that I often tell investors, and again, I make money on volatility. And I like trading Japan. And the one reason why I have stayed awake for 26 years trading overnight in Japan is that Japan acts as if it is the world's ATM when we see some event happen in the US, when global investors say risk on or risk off. Japan is the first large liquid market after the US closes, where investors can actually put a lot of money to work either from the long side or short side. And for that reason, Japan tends to overshoot. It tends to overshoot to the downside and overshoot to the upside. 2 weeks ago, when the war in Iran was really heating up, Sunday night, the Nikkei was down 7%. The US the next day was up or down 1%. When that type of volatility occurs, it presents opportunity. So for professional investors such as myself, we can identify those securities that are mispriced and hopefully move in to exploit the opportunity. That's very important.
That's really helpful.
Well, thank you, Ron. It's quite an honor. It's been a pleasure. Hopefully this helps give everybody a little more perspective into the window of Japan, and I appreciate you having me on. Thank you.
Thanks so much. And until next time, hopefully we'll see you back soon, and look forward to the audience tuning in again next week.